Hi, today is our next FinTech podcast with FinTech experts. And the more FinTech becomes a part of our daily lives, the more sophisticated and complex FinTech products become, and the more businesses become innovative, and the more expertise you need to succeed in this field. So today we have with us Tal Sharon. Tal Sharon is our FinTech expert. We're happy to have you with us. And he is the president of FinTech-Aviv at Israeli FinTech Association. And also he is a managing partner at Israeli leading FinTech consultancy company called Equitech. Tal is specializing in analyzing the requirements of corporate and financial institutes. Also, he is a lecturer in several academic institutions in Israel and abroad, and one of the curators of the first accredited FinTech course in Israel. Hi, Tal.
Hi, Tal. Hi, Vitaly.
Thank you for having me. Great to be on your podcast. And you know, your initial statement is very accurate. I mean, FinTech is rapidly changing a lot of business lines, a lot of non-FinTech, all the non-FinTech world, not only the financial services themselves, and actually can really make an impact in different markets. So thank you for the introduction. Let's start. Vitaly, what do you have in mind?
So Irina probably will lead with some questions, and I will be clarifying if anything from my end.
Okay, sure.
Yeah, we will start our podcast with some blitz questions. They are short, and they will give us a hint. What is your opinion about the main trends? But before, are you a theorist or a practitioner?
Wow, I like to see myself as both. I think it's very important to dig deep, and in order to become some sort of expert or professional in any field that you do. So you have to practice you have to do a lot of theory, but the practice is what gives us the ideas for new products, for the requirements around the world. So analyzing on one hand gives us an idea of what are the trends in the world, but the actual work we're doing with financial institutions, that's what really makes the impact and allow us to understand where is the market is going and what is the actual need in the market, not what only the trends are saying.
Yeah, about trends and practice. As all of us know, cryptocurrencies is not a trend anymore. It's the reality. And have you invested in some cryptocurrencies?
Actually, myself, I haven't. I have I'm not sure we share the same thought about cryptocurrency. I do really believe in the blockchain as a technology to provide solutions for smart contracts, anything that you have a lot of participants that you need to approve and sign off. It's a great platform to use, very secured. Cryptocurrency as a whole is a bit challenging. It had its ups and downs, and different tokens that are more successful and less successful. But myself, no, I haven't invested in crypto.
But would be an interesting if you would, and maybe in some years, if you would do this, we are interested to hear your opinion about it. Okay, let's go into FinTech. In your opinion, there are several options. We discovered what FinTech for us is, but in your opinion, what is FinTech? Is this social change? Is this the emerging trend for innovation? Is this the mode of bringing social different changes, or might you have some other opinion about it? What is this?
I think it's a bit broader than everything you described altogether, and I'll explain why. FinTech is actually technology to provide financial services to end customers, and it's not limited only to financial institutions and fintechs, not at all. I truly believe in the notion that any company will become a fintech company, and the reason is that if you have enough data and you have the way to engage with the customers, why not adding another layer of financial services? Shopify, for example, is a company that is non-fintech at all, but they do generate about 50% of their revenues from financial services. You see other companies going into this realm just because they understand this is one of the most important things we have to deal with our money, with our lives, with our savings. You see giants like T-Mobile from telco launching T-Mobile Cash, for example. So you have a lot of different examples of non-fintech companies who are not in the financial services at all, but understand the power that financial service can provide their end customers and the value that they can generate. So in my opinion, fintech is much broader than this.
When you first started working in fintech, or when you encountered it first?
2014 was the year we launched Equitech and FinTech-Aviv. That was our first engagement with fintech in general. Our first client was focused on the secondary market deals, any asset, any employee shares that they wanted to liquidate, and there's no platform for that. That was the first engagement we had, and we started drilling down and understanding, okay, this can be a major trend, and we decided to put a focus on that. And I think we've done a lot in the past several years. In every year, we're trying to create a new value proposition. If it's a podcast channel, if it is the academy program, the accredited course, a digital arm that provide the fintech-related marketing campaign. So everything around fintech, and we're adding more and more layers of connectivity to regulators, to end customers, financial institutions. So I think from the get-go in 2014, we decided, okay, this is where we're going to put our effort, and it yield great result. And since 2018, we've been selected as one of the leading consultancy firm by Chambers and Partners in Israel, alongside EY and Deloitte and KPMG. So we're in really good company, and we keep growing this. And this has become my personal passion.
And as you said, this is not just one mode of something of innovation or social. It's much broader. And as you explained, I understand it. And from examples you said, like what are the greatest use cases for fintech?
Wow, there's a lot. There's a lot. Maybe one that I'd like to touch is how fintech can really create an impact, especially in developing countries. It's a field that I think it is. Can really make an impact, can really make a change. Everything that got to do with unprivileged women and children in African country, for example, who don't have any access to cash because the man in the household is getting all the cash. So there are initiatives by regulators to promote digital wallets for them, designed for this specific use case. You have the impact of people who are underbanked or non-banked even in many different countries because they weren't able to go and actually open an account, or it was too expensive or too far. And now we have everything from remote authentication to digital engagement, and everything engaging through mobile phone. In African country, you can see more of the telcos going into this specific market, providing loans to users. As I understand, okay, we're already working with them. We know their history of working with us, of paying our fees. So why not providing them with financing as well? So this is, I think, this has tremendous room in fintech. And another element is probably regulation technology, which it never ends, because any change in compliance really for a financial institution to adopt a regulatory change is very dramatic and costly, a lot of man hour. and companies are taking small bites of a certain regulatory framework and saying, okay, let's automate it and provide it for the financial institution, reduce the cost and ease the process, and maybe even mitigate the fines that relate to it. That's another topic that we see a lot, especially with open banking, GDPR, PSD2. A lot of Israeli FinTech companies are focusing on that realm. These two, but I guess we will touch COVID in a second later. So I'll save the COVID impact for a minute.
So these are both greatest use cases and I guess challenges as well. Because when we talk about emerging countries and we talk about prospects, we talk about regulations as well. And those regulations, they, as you said, change all the time. And for different countries, they are different. And as fintech specialists, you have to count on them, on all of them. And these are the challenges. And as you said about regulations, I would ask about some regulations you encountered working in different countries with different clients. Can you remember the most challenging ones?
Okay, our expertise is understanding different markets and understanding the requirements in that market. This is how we build delegations. This is how we connect the relevant technology to the designated market. So what we'll do is we'll start by analyzing what is the regulatory framework in that market, talk to the financial institutions to understand their challenges, or if they don't know their challenges, work with them to find out what the challenges are. And you'll be surprised how going into one market can be, tremendous work, and not understanding the mentality and regulatory framework can be difficult. I have an example from the Polish market, for example. We had a mission. We had several missions to Warsaw. It's actually a market that we're very active. And we try to promote a lot of cloud-based technology. When the regulator started saying, listen, I want to start seeing cloud-based on one hand, but the infrastructure and let's say the cyber risk were still at hand. So they didn't know really how to work around it. And it just makes the financial industry reluctant to engage in new models, because it's hard for them to understand what will the regulator tell them to do. So when you don't have a very standardized approach in terms of the regulation, and you don't share the information in a way that the financial institution and fintechs can understand and work in alignment to, it's very difficult. And I saw both in Poland and in other markets movement of the regulator from rule-based to what they call as a more of granular view. So today most regulation are, okay, you need to comply to 1, 2, 3, 4. And you have, if you're not compliant with one of them, then you not comply at all. And the movement now is, let's give guidelines of the different methodologies that you need to approach. And you might not have everything, but you'll still be complied by 80%. So it's not a black and white kind of situation. There's a lot of gray area, and regulators starting to understand it and trying to ease the regulation that they publish, and how financial institutions, how fintechs should comply to it.
Well, yeah, that makes sense. Thank you. And about regulations again, in your opinion, will they make fintech more secure, let's say secure and compliant, or will they probably cut down some innovations that might make it more, I don't know, usable or useful for the end users?
So RegTech is more, regulation side is more focused on the B2B. It's less for the end customer. The end customer don't want to have any, he don't want to know, he don't care, he doesn't care. The only thing that they want is to get developer position and the value that from the whoever's providing them the financial service. It's mostly for the B2B side, for the companies, how to approach it, what benefit they can generate from it, because it also produce a lot of business. Because if you have to align to a certain regulation, you might be able to work with other participants as well. And a great example of that is something that we see in the Middle East and non-EU countries of financial institutions just adopting PSD2, adopting GDPR, although they're not complied to, in order to be able to do business with the financial institution in other markets. And on top of that, so startups will want to engage them. So if a startup engage a financial institution that is not compliant with these regulations, then next, when he wants to work with ING in Belgium, or doesn't matter, any financial institution in the European market, it has to do all the regulatory, all the compliance work all over again. So financial institution outside of Europe understood, if we want to be more attractive for startups, we need to adopt these willingly. And this is some trend that we see.
Talking about regulations outside the Europe and compliance outside the Europe, do you know some countries that do not have those regulations in banking sphere or in fintech? Have you heard of them? Maybe some emerging countries where business is just setting up?
I don't know if there is a market without any regulation. There are some that are, easier and more strict. You can definitely see a difference between Kosovo and London, but it's not something that I would say there's a market with a breach that has no regulation and let's go out there and make money. It doesn't work that way. I think regulation, so regulators adopt to the market need. And if a market is focused on right now the need for finance, so they will probably do a regulation around finance in order to allow better engagement for the customer and for the end client, and protect them if it's in setting out the maximum rate for a loan, for example. It's something that is very important in different markets, and you don't see it in every market. In more developing countries, microloans can reach insane amount of interest, which is on one hand very profitable, but on the other hand, just have a lot more room for additional innovation and reducing of costs for the end customers.
I agree with you. Talking about innovation, you mentioned before open banking, and talking about regulations and open banking. In your opinion, are there some risks in open banking, potential risks, or everything is settled up that way that there is no room for fraud or something else?
There's always room for fraud. That's what fraudsters are doing. They're finding room for fraud. So it doesn't matter if they what will be there's a great saying that nothing can be ever 100% secure, nor interface, nothing. If you have the three elements, if you have enough time, money, and motivation, you can probably hack and break into anything. It's just a matter of finding this combination for each one. But so of course there's a lot of fraud risk in open APIs, and especially in engagement with between fintechs and financial institutions. Financial institutions are required to have a very high standard of security, and their reputation really lies on it. If a startup will, let's start with a bank. If a bank have a default or his information was hacked, or the impact on the brand is massive and will take years to recover. For a fintech company, the risk is less dramatic because their let's say name and brand is not as strong and profound as financial institution. It's not that it's not important for them, but the impact, you can't really compare the impact. Now, when you're working with a startup and you want to work with a financial institution, you have to go through certain scrutiny process in cybersecurity. We have a partnership with Finastra, for example. Finastra is, I think, one of the top 3 fintechs globally. And in their payment platform, what they do is they call out fintechs and saying, listen, join our platform, our cloud platform, and we'll connect you through API to the banks that we're working with in very simple explanation. And what they're doing in order to do that, they are taking and evaluating the cyber aspect of the fintech. So when they approach a financial institution, he knows, okay, they have the Finastra cyber stamp. Wonderful. I feel much more comfortable in working with them. In general, the connectivity between fintechs and banks or financial institutions in general relies on the level of comfort you can achieve in this engagement. And you create comfort from demonstrating other customers, from showing how well you deal with the regulation, how do you deal with cyber risk. So every part of these elements just makes it easier for the financial institution to receive a decision, to get a decision. So it's kind of important.
Let's move a bit to technology side. In your opinion, what are the technologies that are in top of priority in fintech for 2020, let's say, or maybe in 2020-2025? Like 5 years period. Many,
2025 is too far from me. Trends are changing way too. I mean, it's impossible. Okay, not impossible, but it'll be an outreach to say what will be the interest in 2025. I think we have such a dramatic year. We don't need to live that far. You know, we touched a couple of minutes. I told you that when we all get to COVID, we'll talk about the technology that relates there. And 2020 is all about that. It's about digital experiences. It's about remote engagements. And it brought to light mainly two aspects in fintech that it's not that they weren't strong before, but now it's two of the most interesting fintech segment. One is trading, because people are stuck at home. And when you're stuck at home and you're trying to say, how will I make money? So why not use capital markets in order to do that and get some great help from different fintechs? If it's, I don't know, eToro or other fintechs that are providing social investments. So investment side and trading side has really grown rapidly, and we see a lot of interest from our partners and investors in locating startups in this field. Another field that is extremely on the rise is every technology that got to do with financing. Building alternative credit score, doing automatic underwriting, providing technology to actually allow distributing debt and collection. So all these are very important right now because a lot of market are in dire situation and the businesses are screaming for help. The SMEs are yelling like, we need finance in order to maintain ourselves, in order not to close. And the banks are not always listening, or they not interested in providing such finance. And the reason is that mostly opportunity. One enterprise is, let's say, 10 or 15 times bigger than an SME. The underwriting process is the same, but they will yield much more revenue from providing a single loan to an enterprise than having 20 loans to SMEs, where the risk much higher. They have less information that they can have to evaluate the potential risk of the specific loan, and it's very costly, because the underwriting process pretty much the same. So it opened up room for a lot of fintechs, a lot of alternative lenders to provide solutions for SMEs. For if it's in the US, anyone who can't have a credit score, if it's young professionals coming from other markets, people who needs cash or a loan just for until the end of the month, until they get the next paycheck. Or so there's a lot of need for that, and this is something that is actually can bring back a market from a very complex situation into great prosperity or going back to prosperity. So these are the two main ones. Yeah.
So talking about trends, we are investigating now. There are need for digital accounts, no cash before the quarantine. It was also trend, but today this is booming. And probably small and medium enterprises, they will have bigger share in market than the bigger enterprises because the risks are lower, or not.
Okay, I'll divide this because first you started with how COVID really amplified the need for digital engagement, and I'll give you another aspect in this. So it's not only the need has been the changes in the need, it's also in the way that we analyze data. So how do you work with a restaurant that you don't know how they're going to generate revenues? How can you provide them lending a loan based on what projections? So you need to find alternative data to analyze a lot of different elements in order to provide a loan or even to go in business with. There's a great company called Explorio. They're doing alternative data. So COVID amplified the need to locate these data points. And it's not that they weren't there before. It just now there's a much higher need for that because you need to adopt the new market trend and the new way that the industry is doing business. And if you'll stay and maintain the same way of evaluation of companies, of startups, of businesses, you won't be able to work with anyone because that's completely changed. We see it in lending. We also see it in fraud. The way people do fraud is different, and the red flags that you should have as a CISO in a financial institution have changed because you have less physical and more digital, more remote engaged fraud. So how do you deal with that? Men in the middle attack, all kinds of attacks that maybe were less common before COVID, but right now it's just booming because of the new phenomena of remote and Zoom-like sessions.
Something about technologies. We acknowledge that face IDs, palm screening, voice IDs, they were presented in our market before. But what do you see about those technologies in future? Will they rise, or maybe there appear some other ways to identify the user for banking systems? Or maybe you have some opinion about biochips. We know might be an ethical paradox, but it might have future or not. Or you have opinion about some other technologies that will bring new change to banking sector and to FinTech.
So I think two main elements will lead the trend in what will be the next innovation in this realm. One is customer requirements, and two is market needs. And what I mean by that, market needs right now is less. No, I don't want to touch anything. I want to have a seamless engagement. Not only because I like it. It's not, pre-COVID, everybody talked about the seamless engagement you have when with Uber or with Get, right? You get in a taxi, get out of a taxi, you paid, you had a financial transaction, but you weren't really aware of it. It's just a part of the process. It's not something that you had to engage with. You didn't, other than setting a rate for your driver, it's not, you didn't really do anything. And that was a notion that a lot of financial institutions said, okay, we want to reach a seamless engagement like that in other realms as well. But right now, it connects well with the desperate need for digital engagement, because people cannot, it's not like COVID will go away and evaporate and people will go back to normal. Even if that happened, and I don't know if it will, no one does, but even if that will happen, people have adopted to this new way of conducting business, of this new life of social distancing, and it won't, everything won't just go back to the way it worked. It just won't happen. It's been too long, and probably will take some more time. So, people learn these methodologies, and this is what they will be used to. So I want to go into the supermarket, get my stuff, and get out as fast as I can, not to go through the cashier. So why do I need to go through the cashier? Just have a payment solution. You have different ideas in there. Like when you put down you took kind of some milk and you put it in the cart, it already calculates, and you just get it on your phone and said okay, and you pay what you need. Or you don't even do that. You just walk outside with the groceries you took and get just invoice of what you paid later on. It's already connected to the credit card or your bank account, and the transaction is being done in the back end. And to support that, you need a lot of facial recognition processes to make sure that you have or to mitigate the fraud, because you need to know exactly who's doing what. There's a great company, they took facial recognition to another realm. So when they're taking a picture of someone or video of someone, they can read the blood pressure, the heart rate, a lot of things just remotely. And taking this to digital health industry is one thing, but you can definitely utilize it in financial industry as well, where, for example, an insurance company can evaluate your health status in order to provide you with what insurance type or what insurance premium will be relevant for you, and be more specific with it. So remote engagement, remote technologies will be keep uprising. I have no doubt. Without facial recognition, I think right now I just see a lot of it. A lot of companies are focusing on this, trying to move from fingerprint, which is the kind of a thing of it's not a thing of the past. Any phone uses it, and a lot of interfaces are using it, but we need to evolve beyond that. It still requires me to do something. It still requires my hands not to be wet, or if I went to the beach, I can't use fingerprint at all. It's completely shifted. So we need better solutions, and that's where it connects to the market need and interests. And if I'll have a bad experience several times with my thumb trying to connect, and I'll convey it to Samsung that I'm not satisfied with it, so they will try to find a solution if enough people talk about this, and it will become an issue. Or if they find a solution that reduces the friction and even have less fraud in the first place.
But coping with fraud also demanding us every year to collect more and more user data, and this amount is rising every year. And this is another question to talk about, not on this podcast, but this is probably a room for fraud and room for different compliances as well. Okay, let's shift a bit to your experience working in FinTech consulting. What challenges have you faced in recent years?
Wow, there's plenty, because we're working with different entities. So financial institutions have one need, and regulators have kind of different. I can tell you several projects that I think have kind of unique and really interesting. One of them can be a bank that we did the financial FinTech Academy program for them. So we took 15 mid-level executives, just started to pick their brain and ask them, what solution do you think will be good for your department? We selected 5 of them with the leading, like the C-level executives in that bank. And then we engaged in teaching them FinTech, really providing them a very intense course in fintech and broad understanding of the different segments, divided them into groups, and they had to produce some sort of business use case for their selected idea. And this really generate amazing results. Internal entrepreneurs providing tools for great connectivity, cross-department collaboration, reduction of cost, even some ideas that generate revenue. And it's not that it's not existing, it's just the idea that you didn't ask the right people. The C-level executive cannot deal with all the challenges that financial institution has. You need to take the people who are doing the daily jobs, who are doing the day-to-day work, and ask them, listen, where do you see a default? Where do you see we can make a change? And I think that's the guideline for everything that we do in Equitech, and I do specifically. I like to find where we can make the most impact. So that's one type of engagement. Another one can be with regulators on how to make an impact in a certain industry, how to create a fintech ecosystem. Many markets are looking at Israel as a global fintech hub, and they should. The fintech industry in Israel is unbelievable. Although it's a small market, it really has tremendous amount of experience. There's over 500 fintechs. In 2019, we had $1.8 billion invested in fintech startups, which represent more than 5% of the global investment in fintech. That's insane. We're a population of 0.001% of the global population, but we generate 5% of global fintech. That's dramatic. That's a market that you should be aware of. And a lot of regulators are trying to understand, okay, why is that happening? And what can we do in order to make our market specialize in that way? We see examples like that, like Estonia. No one knew about Estonia before the e-residency, or Lithuania. Lithuania in recent years, the central bank there did tremendous work in adopting and opening their gates for EMI, for electronic money institutions. And that really paved the way for them becoming the number 2 country in the European market to work on anything that got to do with EMI. The number of EMIs they produce are second only to London. And from a small market, so the size of the market, it doesn't matter anymore. It's not that it doesn't matter, but it's less dramatic. And evolving this can really call for more fintechs to develop, because they see, okay, there's a lot of effort putting into this. Financial institutions are producing a lot of innovation. Regulators are putting effort into this. This should be my next endeavor. And in time, give investors signals that, okay, you should bear in mind this market. It produces a lot of innovation. So this kind of work is something that we did in Sofia, in Madrid, in Mexico, Kosovo, Hungary, different work with regulators on how can they create a sustainable fintech ecosystem. And the tools we provide, everything from building a marketplace for innovation, or better engagement with a regulator, or accelerator program, or events program, really depends. But that's I think one of my favorite aspect of this of the engagement between fintech and new markets.
And those markets who come to you, and among your clients you mostly work with, what advice they are seeking for?
They want to understand how other markets, how other financial institutions are working. Not only see innovation, but what do a leading or same tier bank has implemented in a different market, and why? What was the impact? They want to understand the process and the result of the collaboration, and not only see, okay, this innovation or this technology or this startup can help you with X, but what are the results? What happened in other market that you implemented that? Was it successful? What alternative do I have to this? So I think what we see here with, globalization, and COVID has a lot to do with it, because before, pre-COVID, financial institutions mostly engage with the fintechs that surround them, that they found in events that are, the same streets or in the same proximity. Right now, it doesn't matter, because it doesn't matter if you work with a company across the street or 6,000 miles from you. The process will be the same. You still do it remotely. You still exchange information, and it opened up a lot of financial institutions to try to expand their point of view, not to the specific market that they're working with, but to see other markets, how they operate, and startups from other markets, and maybe they can bring them an edge. Because when you're working with a specific startup, most likely, if it's good, most likely that all the financial institutions are working with them. So where's the edge? If I want to find something like that, I need to approach other markets, and COVID really amplified it.
And this is a paradox of COVID. When all the businesses become more closed and remote, their expansion became global. So this is a paradox.
Yeah.
From my side, I guess I have the only last question, and then I will transfer the question over to Vitaly if he has. Talking about professional advice, will you give some professional advice to our listeners who will see and who will listen to our podcast? If they want to start, for example, business in FinTech, where should they start from?
So okay, great question. And this is something I talk about with all the FinTech that we're working with. And find out what you're passionate about and see if there's a need. And the way for you to see if there's a need is simply ask. Simply build a questionnaire and ask your designated clients. If it's financial institution, yes, it's a bit more complex, but you can still reach that with the right amount of legwork, or trying to connect with other facilitators. By all means, approach us, we'll help. But we see a lot of startups that they believe to have a great idea, but they haven't tested the water, and no one really interested in paying for that value proposition. So although it sounds great, it's not good enough. So before running and saying, okay, I have a great idea, understand if the problem that you're looking at is really a problem that others are facing as well, or you just, you just find something that's too niche for a solution to be broad, or not relevant enough for investors to invest, or financial institution to adopt. So make your research and make sure that your product is giving the value that you want to deliver to the relevant end customers, and check with them in advance before you launch, before you start working with it.
This is a great advice. Thank you. Many businesses unfortunately neglect it, but it really should be done before you start something. Yeah. Okay, Vitaly, maybe you have some questions.
Yeah, I just would like to clarify a couple of questions. So we had a topic discussing the technologies and trends in FinTech. So regarding Gartner, one of the important or emerging technology will be voice user interface. But the question here, whether it will be applicable for FinTech. So what do you think about using voice user interface in FinTech?
I actually see several companies working on this, on trading. Just pronounce what you want to invest in, and how the strategy you want, what strategy you want to adopt, and then implement it. But I think the voice, so there's two layers to that. One is the recorded voice, so what I'll say and how, and transform it into a series of actions. So I'll tell something and something will happen. What is more interesting is having voice recognition just to understand the back end. and provide me with services or offering that I didn't ask for, but I do need. For example, if I'm on the phone and buying, I don't know, buying tickets or for a flight, or I'm talking to a representative and trying to get a loan, a lot of information is in the text that I'm saying that can be taken, evaluated, and see, okay, now I understand a lot more things about you. Maybe I can provide you with another set of value proposition. Now, this can be done outside of voice, right? You can take notes and write yourself and have it. But think how much more streamlined it is, as seamless it is, if after a conversation you get all the information or a new value proposition based on things that you weren't even looking for, but you actually need them. We had there's this propaganda or not, I don't know, and I want to engage in it. If Facebook are listening to what we say and then provide us with targeted marketing based on what we talked about. So if we talked about having a wedding, then we'll start seeing ads in this topic. So I'm not getting it if they're doing it or not, but in a way, that's a really good way to engage and adopt services and adopt and consume. We have to bear in mind the risk of privacy, but in some sort of way, privacy is already not ours. Our information is widely open. People are just tapping okay. No one reads what it really means, and whoever thinks they're still private, you're probably not. So I guess it's just a matter of time that people understand, okay, my privacy is not mine, and maybe I should utilize it for why not get better service out of it if it's already not mine. We'll see.
Okay, yeah, that's cool. And at the beginning of the year, there was emerging news that NBA players tokenizate their contracts. So, but it was just one case at the beginning of the year. So what do you think, whether it will be a trend or it's just a rare case that happened one time and that's it?
Wow, that's hard to say. It's hard to say because banks. So when cryptocurrency just started and blockchain technology started, most of the financial institutions were afraid of it and tried not to engage in it. If you were a blockchain-based company or a crypto-based company, the banks didn't want anything to do with you or your technology. But that has shifted and changed, and they understand. Okay, then there was the time that of the hype of, okay, we have to engage in that because everybody are talking about that, and we see the amount of money that's going through it. We have to take part of it. And then after the hype, banks understood, wait, or financial institutions understood, wait, this can be a great technology, but let's not get ahead of ourselves and find out what use cases this can be used for. So as I mentioned in the beginning, smart contract is always good. It is a great product or great value that can be delivered through blockchain, through authentication. But I don't know how is this being adopted. There are several banks that are doing a lot of work in that. You see JP Morgan or even State Bank of India, different tiers doing. It's not like I'm equivalating between these two. I'm just trying to give examples of two very different tiers of banks who are utilizing blockchain technology. I think it will come from the market. So if people will request, will have interest in it, then someone will have to give them a service for it, and that what will make the engagement or more NBA players putting their contract on blockchain or other contracts that are relevant. But it's not going to come from regulatory. It's not going to come from the financial institutions. It's only going to come from the end customers. So the more we'll see it, the more, okay, maybe there's a market to it, and I should launch a platform that provides tokenization for such. Depends. It's a bit more complex, and it's a complex world. It's not a simple value proposition. Your end customers need to be sophisticated enough to understand this, understand what does it mean to have something on the blockchain. For an elder group of population, it's very hard for them to comprehend that how is this working, where does it sit. So they're trying to understand. So in time it'll be easier, but still maybe we'll miss the train, and there'll be better ways or easier way to do something that doesn't include blockchain. We already see more and more, and I'd say up to 2 years ago, you saw blockchain companies. They were blockchain companies. Right now, no one is calling themselves a blockchain company, because it's like calling yourself an AI company or a machine learning company. It's not. It's a technology you use. It's not what defines the company you are. And there's no more. I haven't seen in a while a blockchain company. It's a company that produces a certain value proposition, and a part of it, or a large part of it, is based on blockchain technology. That's my 2 cents on that.
Okay, thank you for sharing. I believe that we almost out of the time, so I also probably stop with my questions at this moment. But thank you, Tal, for having this time with us. It was a pleasure to talk to you.
It was fun to have the discussion. Thank you for inviting me.